Good morning. I want to talk to you about where we are with the VIX term structure, some market news, where we are just in the actual price of UVXY and VXX, and more coming up right now in the Short Vol live show. So stay with me.
You're watching Famous Dave on YouTube.
All right, so it looks like we're kind of fading a little bit into the open. We had a big rally back from to unchanged and actually slightly above unchanged this morning after kind of selling off after the close. It appears we kind of sold off after the close on this Mnuchin news. This was the Steve Mnuchin came out and said that they will not be extending the Fed special powers after December 31st. Which was responded to by the Fed sort of in a negative way. Also, we got news that of a pending curfew in California, which kind of moved the market lower. It was interesting. Yesterday, we actually had news from Chuck Schumer that negotiations were continuing for some sort of stimulus package with Mitch McConnell, and that the two were talking together. I want to kind of make the case for you for to be short volatility as well as to be long volatility. You see a lot of, it's a thing online when somebody comes out with an idea and they're very strong in putting forward, especially in the stock market. You see people come out and say, this is what's going to happen, and they're so sure of themselves, and they want to, they're going to cut down anybody who disagrees with them, and they're going to make their case, and they're positive that this or that is going to happen. And new people to the market can get attracted to that sort of thing, because when you don't, when you're new to the market and you're not comfortable with the uncertainty facing investors and traders, you want to latch on to some sort of certainty, and finding some sort of person who appears to be very confident in their view of what's going to happen in the future seems attractive. But I want to caution you away from that. In fact, I want you to kind of take the opposite approach, which is to consider the opposite approach of what position you have on at all times. I want you to be as informed as possible and be always aware that you could be wrong, or that the market could do something that you were not thinking it was going to do, so that you are fully informed as far as your trading decisions. Was looking at the Facebook options group, and there was a guy in there who he'd sold a put spread in Moderna, the vaccine drug. The company had moved way up on positive news, and he'd sold a put vertical, and which basically got him long, and Moderna had retraced and gone back down, and he lost a bunch of money on it, and he was asking to the forum what should he do next. And you should have in mind what you would do in different situations should they occur. Just because something is unlikely to occur doesn't mean it's going to, but you should think out ahead of time and have thought out what will happen if the worst case scenario occurs. Because believe me, being a long-term market participant, I know that the worst case scenario does occur more times than you would like it to, and it is those times when you are just dreading that might possibly happen, that it's definitely going to happen every time. So let's dig into the numbers a little bit and take a look at the case for being long versus being short VIX and VIX products right now. And so let's take a look, first of all, at a chart of the VIX. And if you look at a chart of the VIX over the last couple months, it really makes the case for almost by itself that maybe we are at a spot where the market is just waiting for the next shoe to drop, and that we're at the low end of volatility. Let me show you what I mean here. I'm going to get out of the way here for a second. if we look at the VIX over, let's say, 180 days, we really appear to be kind of on the low end of things here, right? We did reach this low of 20 and change back in August, but since then we've kind of popped back up, and then now we're back down to this level. But this is kind of the lowest level we've been at in a while. And sometimes I like to think of things as just kind of do these what if scenarios in my mind. So for example, right now, what if we were to spike today, like some bad news comes out and we spike today? Would I feel like, wow, my position really wasn't justified to be short right here? It should have seemed obvious to me that this wasn't a great place to be short if we were to spike right now, right? Now, I'm not saying we will spike, but I'm just saying, kind of walk out scenarios in your mind. I don't want you folks to be that guy in the options group. God bless him. I hope he makes $1 zillion, but I don't want you to be that guy who is taken by surprise. There's no reason we should ever be taken by surprise, because there's only a finite number of things that can happen to you when you have a position on. It can either go for you, or it can go against you, or it cannot move. And so you should never be taken by surprise with a position. And let's look at the term structure now for a second. And I want to talk about kind of the two ways that you could interpret the VIX term structure at the moment here. Welcome to everybody in the chat. I do see you out there, and it's great to have everybody here. All right, so here's the term structure. And once again, with the term structure, it is another market thing that we can view in different ways. This is a very healthy term structure as far as market rallies. When there's a slow rally going on, the term structure looks like this. This is like, there's nothing in this term structure that is a warning sign to be like, uh-oh, there's danger ahead. For months and months and months, we had that dimple for the election. That's gone. We're kind of back to normal. The back months look pretty flat. I'd like to see this term structure actually extend more, with spot moving lower and these months kind of arranging themselves. Once you're past the first month, everything's kind of flat. I'd like to see that kind of continue to slope up, but we know that if the market plays out kind of like it has been, that this slope between December and January, once December expires, the slope between Jan and Feb will look a lot like that. And this number, of contango, 5.8%, 6%, that's per month that the stuff is slowly kind of decaying. So just to do the math quickly in your head, if you've got a VXX that's $18, 10% of $18 would be $1.80. So if you've got 6% of that, you might call it $1 maybe. Stuff's moving down $1 a month, decaying by $1 a month, all things equal. Now, of course, the VIX could move up and could cancel out that $1 a month down move easily. Also, we could continue to move lower, as we're kind of trending right now, and make money to the downside by moving lower. The other way, though, of interpreting this is you've got, we like to say this isn't predictive, but all of the futures farther out in time are at a higher VIX than the VIX is now. So in the most basic sense, this chart shows us that the VIX right now is being judged as a 26 in February. Right now it's a 22. Around 23. It's being judged as a 26 in February right now. Now that takes into account that we could get some, mini spike to 40 and back between now and then, and the average price most of the time could be at 23, but we get one little mini spike that changes the average by February to 26. But regardless, it's showing higher VIX in the future as far as the futures traders have it. So it's kind of that paradox, is the more we get in contango, the lower spot goes compared with the futures, the more it's pointing to a higher, some sort of spike or move in the future. But we like to be in contango because it means that we're decaying every day. It's a long-term feature, but we like it. And I want to talk for a second about the absolute prices of these products. We trade UVXY and VXX. In fact, any sort of options products, we're going to trade a product that's like a $5 or a $10 product different than a $300 or $500 product. It's just the nature of the beast. And once UVXY or VXX get down like below $10, it gets really difficult to, it's harder to make money because the individual options premiums get smaller and smaller, and it's harder to price options at a lower price. And it's not that people get confused and think that that means that it's more likely to spike back to 100 or something like that. And that's not the case. It's just that there's less kind of meat on the bone in individual options premium. Let me show you kind of what I mean here. If we pull up a chart of VXX, like I was trying to look at something, you know, to buy. Right now I'm just naked long some June puts. And I was trying to look at something to sell against them. So for example here, I'm just naked long the June 15 puts. I'm trying to find something to sell in the front months. You know, the 15 strike 7 days out is no bid at 2 cents. 14 days out is no bid at 2 cents. 21 days out is 11 bid at 16. Now I don't really want to give up a unit, a short unit, and change my position. I'm long 34 of these June puts. I don't really want to sell something against them that's like 11 cents or even 20 cents because it just seems like a waste of time. And yeah, percentage-wise, it might be helpful, but you know, something that's 11 cents can so easily. It's almost better just to not sell anything if it's 11 cents in the grand scheme of things. So then I keep moving out. All right, well, December, 28 days to go. 23 cents. That doesn't sound right either. So I almost have to move out to January, right, to find anything that has even enough meat to really sell against this. And I would love to sell something lower than the 15 strike. But even if I move out to January here, okay, you've got 83 cents. But this is an option that's got 2 months to go, right? If you're selling an option that has 2 months to go and is less than $1, you know, it's decaying by like 2 cents a day. It becomes harder and harder to deal with. Now, when VXX was like 30, you could find like some calls that were like $2 to sell. And this is just kind of what happens when these get down to lower prices. And you kind of have to wait in some cases until UVXY, same thing. UVXY is now 12, right? You kind of have to wait until they reverse split again. UVXY, it used to be you could sell some, you know, when it was 25, 30, you could sell some of like the 50 calls for like $1, right? Now, you know, it's 13. Do you really want to sell the 18? It doesn't sound so great, you know, selling the 18 calls for 14 cents 7 days out doesn't seem worth it, right? But when this was a $30 issue and you could sell like a 20% out of the money call for like $1 or you know, $1.50, it seemed much more worth it. And it's almost like these products, when they get at these low prices, the sell side just doesn't seem very attractive to me. It's almost like I'd rather wait for chances on the buy side, just because I have this propensity to not want to give up unit. When you sell an option, you're giving up control of 100 shares of that underlying. And I just from experience as a market maker, I don't want to give up control of shares for cheapo prices, right? I mean, you look pretty pathetic if you sell 100 of these 16 calls for 25 cents and then the thing spikes, and these calls go to $10 or something. It doesn't sound worth it, and you just don't want to sell stuff for really cheap. And so it gets to the point with these products when they get down to these low numbers that they're just not as compelling to trade, and it almost might be time to move on to something else for a little bit until these things split. Now, it probably isn't going to take too long for UVXY to split, but it's been a long time since the last split, right? So UVXY, I don't know if this is the all-time low. Let's go back to the yearly and see. No, it's not. The all-time low is 1040, right? And it's taken us, almost a year to get back here, right? It is almost a year. This was when was it? It was January. But, in December last year, we were down to around 13. We were at this level a year ago, right? And it's taken a year for us to get back down here again. And that's even with, contango decay. The VIX is higher now than it was a year ago, but, is way higher than it was a year ago, and that's part of the reason why this hasn't gone lower. But, this has been a remarkably bad year for collecting decay and for making money to the downside in these products. They haven't done well this year at all. In fact, people have gotten killed. If you were short coming into this year, this thing spiked to 135 and then went back. So this has been a difficult time period for the short vol. And what you'll notice is in like StockTwits and some of these other forums, and even people watching this show and other resources like that, or on Twitter, when we get a huge move like we did this year to the upside, a lot of people disappear. People just, they were trading the short stuff to the short side. It was working for a while, and then they get blown up. Either they blow out or they lose so much money that they just move on to some other idea to trade with, and the forums dry up. People disappear. There's a lot of turnover, and that's kind of what this year has been like. Obviously, if you come in after like March, it's been just that nice downhill ride, and it's worked out being short this stuff ever since that spike, right? But overall, this year has been not good, and we're ready to put the year in our rear view mirror. So let's go back to just the current positions. So I've been short, and nothing's really been happening for a couple days, right? If we look at VXX and we close in on like a 5-day, we've kind of just been moving sideways. And same with the markets. Obviously, the S&P 500 is a good way to look at this, is as good a way to look at this as VXX. But look, we've just kind of moved sideways after having a nice down move, right? If we go to a 20-day chart, we see, oh, we had a nice down move, and then we've just kind of moved sideways for a while. Now, is this pausing before we make another down move, or is this, if you've gotten long VXX, you haven't been punished for being long VXX for a while now. In fact, you've had this nice lottery ticket for, if you bought VXX, in this area a week ago, you've had a free ride of it really hasn't decayed on you, and if anything bad had happened during that whole time, you would have made money if this popped. Will this continue? The market, it conversely, has just kind of moved sideways over the last week or so. However, like we said, the term structure is in a spot that signals kind of bullish that the market could definitely move higher. We could get good news about a stimulus. There's multiple things that could happen here. So, as always, things are a little ambiguous, but I don't think it would be surprising if we did roll through 20 on the VIX. I stopped watching TheoTrade. I'm a big fan of TheoTrade, but I stopped watching them for a little bit, but I came back to it watching them this morning. I watched a video from a couple days ago, and it is, I find it amusing how just always looking for any kind of confirmation that we're going to move lower. TheoTrade, they're always, I kind of feel like over highlighting the fact that he's bearish and that anything points to the downside. He's all over. And I don't want to be somebody who is just always biased to be short volatility. I know the show says short vol show, but I want to have a realistic view of the market and not be biased one way or another. We know long term these products move lower. That's a foregone conclusion. But the money is made in the medium term, and that's the thing we have to figure out. And I don't I hope I'm not always just bearish VIX and acting like stuff is always going to go down, because that's not the way it works. The VIX just moves, it oscillates, it doesn't move lower all the time. VIX products do move lower over time, but I think we need to have a realistic view of what's going on to trade effectively, and we can't just always be biased one way or another. I don't know if you guys saw the Rudy Giuliani press conference yesterday. Really remarkable, and some of my friends who are the most firm supporters of Trump. One of my buddies, who I've never heard him say a negative thing about the president before, is finally saying, look, he's got to kind of, pack it in, it's Rudy Giuliani is not doing a good job of representing him. Let's put it that way. And the conspiracy theories are getting wilder and wilder, and I don't think anyone believes what he's saying at this point. So it's unfortunate. I believe that they need to find a way that the president can save face and somehow declare a victory and get out of this situation, because the case is just not strong for the case that they're trying to make about fraud and to try to overturn some of these votes is just not strong. And Biden is ahead by 83,000 votes in Pennsylvania, and all challenges to that have failed so far. And regardless of what happens in other states, which seems to be failing also, that's kind of insurmountable right now by the president and his team. And I think that they're going to find that public opinion is going to start to move against him if he doesn't get himself out of this situation at some point. Lindsey Graham calling up states and asking them to change votes, the president calling up Michigan election board, and then they change their ideas right after he calls them. That's not good. It's not legal, right? So, I'm not thrilled about either candidate. I'm not a huge fan of the Democratic candidate, and it's all a mess. But I think that we have to get past the situation right now. However, for the market, this is a period in the market of relative calm, and I think that we can predict somewhat relative calm for the next month, right? Because we know that the president is in lame duck mode, right? So even if he does make tweets in the middle of the night, they're not going to move the market as much as they would have if he had, if he was, had 400 electoral votes or whatever, and was, going to be president again. At the same time, we know that both parties don't want to rock the boat too much ahead of these Georgia Senate elections coming in January. So while the political system is kind of in a holding pattern, we know that we're kind of in a holding pattern as far as the stimulus too. And all of this holding pattern stuff translates for the markets to stability and predictability a little bit, because we know that it's less likely that some big market moving event is going to happen in the next few weeks. And this, to me, speaks to vol coming in, to the market possibly rallying, but not the market not having huge moves at the moment, because we are kind of in a holding pattern, like I said. I do want to caution you ahead of this Thanksgiving week to remember that markets are going to have an abbreviated holiday week next week, and there is a historical drift upward during this week. So if this unfolds like most years, we will see the markets kind of drift higher a little bit. However, be aware that there's not a lot of liquidity next week. People will be out of town. The markets will be wider. If you're stuck and have to get out of some position, it's going to be harder to do that. And if something does happen that's extreme in the markets, stuff is going to move more than it would, because there's not as many players out there. People are going to be on vacation now. Less people are traveling than usual, so we might see it a little bit different this time. However, just the nature of it being a holiday week, it's different. It's played different. As market participants, we play this differently next week than we would a normal week. It's a holiday week, and we want to be aware of a lack of liquidity. So get on that page. Get on the page of this is a holiday week coming up. When I was in the pit, it would be like half the people are gone. We'd be, doing Jello shots, hanging out at the office, coming in late, maybe don't come in at all. Everybody's kind of relaxed and hanging out. But for the astute trader, if you can get in there and stay focused, you're going to see opportunities. There's going to be stuff that's mispriced, right? When the markets are wide like that, put a bid in, put a low ball bid in. Why not, right? Someone might hit you. Some of this computer program trading stuff now gets a little wacky, especially during these periods. So there's nothing wrong with putting a low ball bid in something that you're interested in possibly buying, putting a high ball offer in something you're long, and just seeing what happens, because stranger things have happened. There is opportunity in times of illiquidity like this. So keep your wits about you during these times when everybody else is kind of relaxed and on the sidelines, because those can be opportunities for you. So yeah, I have probably the most risk on that I've had in a while to the short side right here, and the things that keep me up at night are like just looking at a VIX chart and seeing how low we are. If we look at the range over the last 6 months, we are in a low, but I think there's a possibility that we can move lower from here. So I do have the short on, and when I look at hedging my short against other options, everything looks so cheap to me that it's very hard to deal with. That's kind of where I am. Anyways, I want to let you go as we open the markets today. I noticed Victoria's Secret had a big up move yesterday. Let's take a quick look at market headlines. I'm going to go to Drudge Report just to see the update on things. In other news, the president's daughter was coming out against possible investigations of her businesses that there's been a lot of stuff on Twitter talking about investigations of her businesses possibly pending. Obviously, the city, my sister's kids in New York are back out of school. There's a lot of closings going on lately. We'll see how that actually affects Thanksgiving. California curfews, let's see. Bishop urges Catholics to avoid the vaccine. That's been on my mind a lot, that when this vaccine comes out, if nobody takes it, then it's not going to be very effective, right? And polling my friends, nobody seems to want to take it. So I don't know how that's going to play. I think, though, that it's not really going to be available for us normal people to take anyways for quite some time. So hopefully during the meantime, let's say the vaccine comes out and there's the opening bell. Let's say the vaccine comes out and it takes 6 months for us actual normal public to get to it. By that time, there should be more data on it and people should be more comfortable with taking it, I would think. Let's see. And that's kind of where we are right now as we move into this Friday. And remember, abbreviated week next week. Plan appropriately for that. Realize that your decay, it's going to be a little wacky with options premiums, right? If you're short premiums, when that time premium comes out, is not necessarily equally split between days. So if you're short some call options, you might see them come in a lot one day and then not move for days. So be strategic with your positions. If you're short options and it comes in a lot one day, maybe take some off, because it doesn't happen in a linear fashion over these vacations. They'll take stuff way down and then it might stay at that same price through the next Monday after that week. So there you go. All right, well, listen, thanks so much for everybody's support, and I wish you best of trading this week. Like I said before, I'm always available to talk with you over Twitter, and we'll see what happens. I'm on the short side right now, so may the markets rally today, and may you have a great weekend. I'll see you soon next time. Thanks for watching.
You're watching Famous Dave.